Ravikant. So hello and welcome to the new episode of the Full Funnel B2B Marketing Podcast. This is your host, Andrei Zinkovich, and my guest is Eric Jorgenson, who wrote a brilliant book called The Almanac of Naval Ravikant. You know, guys, that typically we discuss different B2B marketing tactics, but today I want to discuss one of the most important things to a successful business, mental models. And Eric, I believe, is the best guest who can chat with me about this topic. For those who don't know Naval, first of all, he is a modern philosopher and tech entrepreneur who grew in a poor family in India but moved to the United States and made a successful career. He founded AngelList and invested in Uber, Twitter, and other successful startups that became unicorns. And just to make a teaser, I thought I shared this with Eric, and I want to share this with you. I paid my son $50 to read the book and make a presentation with the key ideas, learnings, and takeaways from this book, as I believe this book can teach more than knowledge you can get from the college. So I'm super excited about this chat. Eric, thanks a lot for joining me.
Thanks for having me. I think this is going to be fun. I'm always excited for any mental model related conversation. It's one of my favorite topics.
So let's start with a rapid fire chat. I would like to ask you 3 questions, and you just need to reply with the first things that will come to your mind. So the first one is, what are top 3 ideas you learned from Naval that changed your mindset?
Critical to building wealth. The second is that happiness is fundamentally a choice, and all of your perceptions are kind of within your control. And the third is maybe the amount that evolution explains as a mental model for human behavior. I think that's a really interesting, maybe underrated piece of that he's shared and popularized.
And when you was writing the book, what were the top 3 eye-opener ideas for you?
Leverage is definitely the rabbit hole that I've gone down the far. Where were we?
Yeah, so let's discuss these 3 eye-opener ideas that you had when you was writing the book.
I think there's so much that he covered. I think I really understood a lot of what he explained about wealth was like breaking that formula down. And I think specific knowledge was a really kind of helpful thing to hear as far as embracing your individuality and the things that you are uniquely good at and leaning into those. I think separating the concepts of building wealth from just accumulating money. If you chase money, that often backfires. But if you very deliberately pursue assets that accumulate wealth, and usually in the form of equity, that is actually the path to kind of escaping that, like chasing the money rat race. And just embracing, another idea is maybe embracing the role of remembering that you're going to die. As far like it's one of those kind of paradoxes that your life brightens to the extent that you remember that it's going to end and that you're going to die, and making the most of the time that you have here really pushes you to kind of, it is powerful when paired with this idea of like choosing the mindset and controlling your perspective that can bring around happiness.
And the last question I want to ask you is, what is the number one thing that changed in your business or in your life after applying Naval's wisdom?
Definitely that building or buying, the focus on gaining equity as an asset. And the other is, I've said leverage before, but like this idea of leverage and very specifically reinvesting into higher margin, higher power forms of leverage over time, and realizing that that's a cycle that kind of grows, and you can trace successful careers or successful companies by how they use levers and then reinvest in longer levers and continue to kind of expand their ability to do work. They do the work that does more work later, and are constantly upping their tooling and their skill sets and their team, and just that reinvestment cycle of like, use what you have to get some cash, use that cash to reinvest in more leverage, use that to earn more cash, and just follow that cycle over and over and over again.
And you actually mentioned some of the principles, Naval, and you as well. You are talking about this in the book. So Naval is talking a lot about collecting the right mental models. And let's say the key principles I personally learned from him are leverage, judgment, and accountability. How can you define these models or principles?
So leverage is the one I've studied the most, kind of since completing the book. I think that was the one that, like, there's the most to explore beyond how Naval defined it for us. So we've got leverage is just kind of it's a force multiplier. It's something that you use to accomplish more than you could accomplish on your own. So that could take the form of a tool. And the basic example I use is, it's very hard to chop down a tree with your bare hands. But a lumberjack using an axe is much more productive, and a lumberjack using a chainsaw is even more productive than that. So that's a simplistic example, but we are all using tools every day. I'm using, Zoom and a microphone and a computer and a Wi-Fi connection. And you can see, the power of finding the right SaaS tool or CRM or something like that in a marketing context. Then there's products and people and capital also as other forms of leverage. So I don't want to go too far down that rabbit hole unless we want to kind of do that. But I'll move to judgment and accountability. Naval defines judgment as being, I think wisdom applied to external problems was his definition. And you just build this judgment through experience and through reading and through experience, attempting new projects, building new things, trying companies, placing bets on companies, making investments. And over time, you build this judgment, and in combination with your unique skills and insights, some of it is what you're born, some of it is what you learn, but you can kind of craft your own unique judgment, and then you find problems that with your unique judgment only you can solve. And the bigger the problem and the more unique the problem, the more valuable it's going to be, and the more likely you're going to be able to solve it. And accountability is also a really good one. I think that's something that people tend to overlook as part of the kind of formula for building a successful company or a successful career. And the traditional way that people look at this, or the way you hear people talk about it, is to say, oh, entrepreneurs take risk. Like you have to take risk to earn a reward. And that's true, but you also hear people say great entrepreneurs manage risk, and they mitigate risk, and they reduce risk wherever they can. And I think accountability is a very good word and concept for striking the balance between these two ideas that kind of seemingly conflict. And what accountability really is like you personally are choosing to put your skin in the game, as Talib would say. That's a great book on this concept, but essentially like being willing to take on the downside risk for the risk that you do take on. And if you aren't willing to take that risk to, maybe produce a podcast in your own name, to promote your product, to go out there and sell, to be willing to take out the loan, to start your business, or, whatever the risk is, you have to be willing to take that on yourself, or you aren't entitled to the rewards that come with it. You can't go start a business and then have somebody else do all the work and somebody else put up all the capital and expect to accumulate reward, right? The people who did the work or the people who put up the capital are going to be the ones who claim their rewards. So you have to be willing to and actively seeking out where you can take accountability for delivering a certain result, whether that's in your role as a result to your company, or whether that's, driving your own sales or getting your own clients or whatever that is.
I believe this is one of the most common reasons, when people who want to start own business, a podcast or whatever, building any kind of marketing asset, they are afraid to do this on their own name, and they try to look for somebody else to collaborate just to diminish the, let's say, the risks. So it's not just if they fail, it's not only they will fail, but they will fail together with somebody else. But the truth is, as you said, so the biggest benefits come to the people who can take the risk. And you mentioned the leverage. So can you describe the 4 forms of leverage and the successful examples?
Yeah. So the 4 forms are, as I have classified them, I should say that you won't read this exactly in the book. I've done some work to kind of continue this idea. So the 4 forms, as I classify them, are tools, product, people, and capital. So tools I talked about a little bit. That's everything from an axe or a hammer to a SaaS platform, a car, a computer. Product is a little bit of a tricky name because people tend to think of a product as like a thing. But a product in this context is a product of your mind, right? So it's a blog post, a podcast, a novel, a movie. It's usually a creative product that captures your wisdom or your judgment. I think this also includes software programs. It includes algorithms. It includes, even tweets, right, is like maybe the smallest form of this, but it encapsulates an idea or an insight or something that you have had, and allows that to get replicated over and over and over again. So that's the second classification. The third is people. Naval talks about this as labor, and actually use people intentionally because labor is kind of a limiting view, right? It's not just about employees. It's also about customers. It's about fans. It's about your audience. It's about your family. There's a lot of uncompensated voluntary forms of kind of people leverage. Some of the highest leverage people aren't necessarily the people with the biggest workforces, but they're influential people or well followed or well liked people. And then the fourth is capital. So obviously money is one of those, but capital can also take the form of real estate or equipment or something like it is any asset that can be then used to produce. One of my favorite examples that I think actually falls into this, it's a little counterintuitive. Nick Huber, I just did an interview with him. His business started because he had a 12-month lease that he at his dorm that he couldn't get out of for the last 3 months, even though he was going to go live somewhere else. So his form of capital was actually like a sunk cost in a 3-month lease that he couldn't alter. And so he was trying to figure out how to monetize that, and he couldn't sublease it. So he started using it as storage space. So he used this apartment lease that he couldn't get out of as free sunk cost, like almost a capital that's a form of capital leverage. And he started just storing stuff there and charging people for it. He ended up making like $8,000 or $10,000 in a summer, I think, for just doing that. So I think that's fits that classification as well. But then money has this little bit of an asterisk next to it because you can earn money from tools, people, product, and capital, and then use that to reinvest into buying more of those forms of leverage and kind of laddering them up.
That's a great example. I love it. Thanks a lot for sharing. And there is one thing, I want to ask you is, so you talk about the, let's say, 4 forms of leverage. And at the same time, you have a leverage map worksheet. So how can you explain, first of all, what is leverage map and how to use it? And one more question about this. In business, we always have challenges or problems or issues. And the question I would like to ask you, how to solve them in a leveraged way?
Yeah, this is definitely some of the meat of the course. So one of the things I've been exploring since finishing this book is the number one question I get is like, hey, I get this leverage idea is important and I don't yet know how to apply it in my life. And so that's what Justin and I have been building this course about. And it's, some of these frameworks that you're asking about, which I'll talk through in a second here, but this is exactly the process that we went through to kind of figure out like how we were learning to make more and more leveraged decisions, but it was happening in a very like slow, painful kind of subconscious way. And we would get into this like, so the process of building these frameworks is really the process of like figuring out what questions I'm answering for myself subconsciously over the course of like a week and turning that into like a 20-minute exercise in a structured worksheet in a framework so that we can replicate that for ourselves and teach other people how to go through this process. So the exercise that we do, the core metaphor of the course is building a mountain of levers, right? So I like this visual of that most of the work that I do is to either add a lever to my mountain or extend a lever that's already there. And over time, that gives me the ability to like, every move I make, every lever I push can get more work done, can move more weight farther away. And the mountain gets bigger and bigger and these levers keep stacking and stacking. So the question that you have to ask yourself is, what does my leverage mountain look like today? And what are my next opportunities to add? And what I find through all of these interviews is that almost everybody has a natural inclination towards one or two of those four types of leverage. They are either a tool person or a product person, and that's like how they think. And they're usually eager to learn a new one of the other forms, and they usually have a total mental block about one of the other forms that they don't even think about. So some people are like, I'm an investor. I think about how to deploy my capital really effectively, but I don't know how to hire and manage people or build an audience. And I have some psychological blocker about it maybe. So what that leverage map does is really takes a broad view and forces you to kind of step back and look at all of the things that you're doing. What are the tools that are at work for you? How are you productizing yourself? What are the people that are kind of in your corner and supporting your efforts? What are the capital assets that you have on hand? Where are you strong? Where are you weak? What are your available resources? And where do you want to get eventually? And then it kind of helps you triage what your right next step is. And you might see when you inventory all of this that you have a lot of products working for you. Maybe you are very excellent at writing email campaigns and blog posts, and you're really nailing, your SEO, let's say, but you maybe are not monetizing any of that effectively, or maybe you're monetizing it effectively and you have this pile of cash and you're not sure how to redeploy that cash into new tools or into new people to help you scale up some of those monetizing activities. And so it really just shows you kind of where the balance of your power is and where you're lacking. And usually there's, when you can take the broad view, you start to see the imbalances, and usually there's a huge step function gain to be had by kind of unblock yourself from one of the forms that you tend to be blind to or not necessarily like naturally gifted at employing.
And you just described the mountain of leverage. And I'm wondering, I would like to ask you, what are the layers? So basically you described the layers, but what is a fundamental layer? So do you put people first, or capital, or tools? How do you structure this mountain?
Yeah, they're not, the layers exist within each type. It's a little difficult without the benefit of some of my visuals, but let me kind of do my best. So I think of this mountain as having four different faces. So imagine a pyramid, type of thing. And there's like kind of tools is one corner, product, people, capital. They're each one face of this side of leverage. And so the layers exist, it's not the tools are at the bottom and then product and then people. It's that each face has its own progression of layers. Right. So, and what happens, people is maybe the most clear example of this. People tend to get stuck because they don't see a small step from, or a way to start small, in building this form of leverage. And so, let's use people as one face. And so let's talk about the layers of people leverage. So it's not that you build a huge base layer of people first. It's that you build a small mountain first. And once you have a small mountain, you've got the production efforts that you need to build a medium mountain. And so you build the foundation below it that pushes your small mountain up, and you build another layer below that pushes up, and you build another layer below that pushes up. So let's take a practical example, and let's go from the people form. So you're trying to go too far in one step if you go from, hey, I have a product with no revenue and no help and no support. I need to hire someone full time to help me. Unless you're a funded startup, that's not going to happen, and it's going to be an intimidatingly big leap or too big of a risk, and you're not mitigating that risk, or you don't want to take accountability for that step. So what you do there is find a very small, contained way to employ people leverage. And so that might be using a task-based form of leverage like Fiverr or like Upwork, right? And do one project, hire somebody with a complementary skill set to do one project. From there, you might go on to hire a service provider who's like a very specific skilled service provider. So an example that I use is I hired a proofreader and copy editor to publish my book, or help publish my book. It wasn't a full-time person. It wasn't a huge hire. The other thing that falls into this category is hiring agencies, right? Very defined period, usually specific amount that you're getting invested. And then you can go into maybe hiring a part-time, person on Upwork for an extended commitment. And that kind of lets you ladder from, this small mountain of like, I don't know, I'm just paying somebody $20 to help me design this logo, all the way up to, okay, now I have the foundation, this big mountain, and now I can support paying some, a salesperson $50,000 a year and 10% commission to help sell my products. Or hire a big agency to like take an entire, take recruiting off my plate or something like that. So these sort of examples of starting small, then reinvesting into larger forms of leverage exist on all the four different phases, but it's definitely a common misconception that the layers build on each other. Each form has its own progression and has its own method of reinvestment. And usually what you see is those, as you go from smaller to larger levers within each phase, you see that the bigger margins, they are higher upfront costs, they're higher cost overall, but they are usually higher margin, and they're usually more enduring and require less maintenance. So there's a trade-off that you see between each of these different types of leverage that you might try to employ, about like, how much cost am I willing, how much cost can I bear, how much maintenance time can I bear, how much margin do I need to get out of this form of leverage. And when you kind of triage all those things together, it'll help you figure out, in the context of your broader map, what the right next step is for you for this project or this company.
Thanks a lot for explaining this. So this is just a kind of mental model you can use to find the next opportunity, to find, let's say, the gaps in your business, to find the weaknesses or strengths, and actually identify the next steps, how to grow your career, or how to grow your business. And what are your other favorite mental models?
This is not maybe a classic mental model, but it's one that's kind of top of mind for me because I was writing about it this morning. I haven't published this post yet, but I will soon. I heard it originally from an artist, and the model is working from general to specific. And so these sketch artists create these really incredible, like photorealistic drawings. And this may be obvious to an artist, but it's not obvious to an outsider that they do this by working from general to specific. So if they're drawing a landscape, the first line's the horizon, then maybe a quick tree, and it's just very rough, almost ugly kind of sketching. And all they do at first is get the shapes in rough relation to each other. And then when they have the shapes correct, they can zoom way, way, way in and focus on one detailed piece and do really, really intricate shading. And you see them zoom way in, and then do the detail work once they're certain they know that that detail work won't be wasted. And they know they're roughly right on the layout of everything else. And I think I see parallels to that idea all over the place, right? So if you look at what mathematicians and physicists do, they usually run before doing any like big complicated math. They run very, very rough. They call them Fermi calculations, and they just very roughly do like an order of magnitude approximation. And they say like, how long is it going to take us to get to Pluto at 1/2 of the speed of light? Well, this is like roughly the order. It's going to be roughly the order. And they know that, the order, the right number should be basically between like, I don't know, 50 years and 10 years, let's say. I'm making this up. I know absolutely nothing about astrophysics, but then they know when they get into the precise math, if they come up with an answer that is 500 years, that they're like, oh, I probably made a mistake in the detail work. I need to go back and revisit it because my rough approximation was off by an order of magnitude. You see the same thing. I actually think this is the same process in the startup world as the MVP, right? So they say, don't go build a crazy complicated best version of all of your features. Start with a very basic version of your company and deliver it on your value prop and take that to market and go hear from customers. It's this process of being like roughly right, not precisely wrong, and working from generalities into specifics. I think we see that in a lot of different models, or a lot of different disciplines, I should say. And I'm kind of writing this post where I'm trying to pull them all together because I think it's a really good way to think, and it's a good way to unblock yourself when you're getting too far into the details too quickly. And it can be overwhelming and stressful, and you're trying to make 10 decisions because you haven't made like the one or two big, broad decisions that in general will help you narrow down and do the detail work with greater precision.
Actually, I see a comment from Brian in our chat, and he said that this concept is very similar to a marketing audit. So basically, you start with this, let's say, broad analysis of the business of the marketing assets, and then you dive deeply into specifics like positioning, unique value proposition, marketing campaigns, content strategy. Of course, it depends, what you'll analyze depends on the business model, but more or less, and then you come up with specific recommendations and ideas. And he also asks a question, can you recommend, again, if we'll take a look on this concept that you have shared, can you recommend any questions or quizzes or whatever to audit the business? So going from the broad to specifics, what questions can be asked to come up with some actionable insights?
I'm not sure I understand what he or she is driving at, but I think, if it's just looking for maybe opportunities or weaknesses in your business, then I think the best thing to do there is look at it like an investor. So one of my favorite Buffett quotes is like, I'm a better investor because I'm a businessman, and I'm a better businessman because I'm an investor. And I think as entrepreneurs, sometimes we tend to look at our business with rose-colored glasses and fall in love with it, or find it very difficult to criticize ourselves or see the weaknesses of it. And if we just kind of try to step outside our company and put on an investor's hat and say like, as would an investor be excited to put capital into this business? If, why would they and why wouldn't they? And you can find a lot of good, there's private equity shops or venture capitalists or whatever that all share their kind of investing framework or investing checklist or hypotheses. And I would maybe sit down with one of those and go through that checklist, go through their investing frameworks. I have some friends who are private equity investors, and they have their investing checklist, and it's not necessarily that the company that they're looking at buying has to pass every single one of those, but they do want to identify the risks. And so one might be customer concentration. do you have one customer who makes up more than half of your revenue? Like, that's a risk. It's not terrible, it's, I'm glad you have that customer. It's better than not having it, but that's something that an investor would look at and maybe be worried about. How much time is the owner required to be there? How much personnel risk is there? If one person quits, is your company like all of a sudden screwed? Do you have platform risk? Like, if Amazon removes your product, does your revenue go to zero? Things like that. Stepping outside that will, and using an investor's perspective, I think is probably the best way to answer that question.
I love this answer, and it reminded me about the chat I had with Nathan Latka. So he was sharing some examples of SaaS companies that grew on different platforms like Amazon, HubSpot, Zoom, marketplaces, and this is really interesting. So from one point, companies found a niche, so they created created DON, so the, let's say, Zoom users or HubSpot users, they just purchased it, and they grew simply leveraging the database, the customer database of these platforms. But at the same time, there is a huge risk for investors. So they are looking, okay, what if Zoom will shoot, your product on their marketplace, or if Amazon will shoot the product? So that's kind of really interesting conversation. From your point of view, how to decrease, if there is any chance to decrease that risk, or how to find maybe the right way to balance the risk?
Yeah, I mean, I think there's no business that's risk-free, right? So like,
Yeah.
your approach of the approach isn't necessarily to like run around hammering out every risk in your business. And I think there's a very natural, Peter Thiel talks in 0 to 1, like most companies only have one distribution channel that really, really works. And the right answer isn't to take from that distribution channel and go spend money on other distribution channels that don't work. 80-20 is maybe a little bit safer than 100-0. But some of the companies that have grown the fastest and the most sustainably are the ones that go from being really, really focused on one distribution channel through that kind of S curve. And then as they see that start to level out, they jump to another one, and they have another kind of growth strategy ready, or exploring. They're spending 20% of their time exploring new possibilities, while they spend 80% of their time exploiting the distribution channel that's already working for them. There's some great posts by Casey Winters about this. This is like kind of in the growth discipline in the Silicon Valley world, right? So Brian Balfour has a great blog about this. Casey Winters has a great blog about this. Kevin Kwok writes about this a little bit. So if you're looking for more on that, as far as I think BN was asking in the chat, like what a place where all those questions are. Those are the investor questions. I would Google like investor checklist or something like that. I think Monish Pabrai has a good version of this. I can't remember if Brent Beshore has shared his publicly or not, but I know he has talked about having a checklist approach. Charlie Munger has some great like mental model investment checklist approaches. So if you go through Poor Charlie's Almanac, you'll see great questions that'll kind of guide your thinking in some of those. They're not very, and some of them are pretty tactical. And there's actually another book called Double Your Profits in 6 months or Less that is maybe another like way to look through, that's a series of very tactical questions of like, if you see this, have you tried this? If you see this problem, have you tried this? If you see this problem, have you tried this? So if you're just looking for ways to kind of stress test your business and try to get the most out of it, those are maybe some specific resources I would look to. I'm sure there's great investor checklists out there that I don't know about. So, and maybe some even that are more specific to your industry or your business model.
Naval is talking a lot about collecting the right mental models. what's your approach? How do you find this mental? First of all, how do you find these mental models, and then how do you go with them? How do you identify if it's a right mental model or no? Because you need to somehow test it out.
Yeah, I mean, so first, I think the easiest thing to do is just start reading the great books about mental models, books and blogs, I should say now. So, probably 10 years ago, I picked up Poor Charlie's Almanac, and that was my introduction to that world of mental models. I still think that's a great place to start. It's not, it's a big book. It's heavy. It's like, it's an easy read, but it is a big and a kind of expensive book. But I think it's incredibly worth it. From there, you can go into Seeking Wisdom is by Peter Bevelin, is a great book. It's not a narrative read. It's a little bit more of a reference, but it has great information about mental models. A more recent one is Super Thinking. The Farnham Street blog is an incredible resource for mental models. Lattice Work, I believe it's just ltcwrk.com, by Blas Moros, is also an incredible resource for mental models. Super, super comprehensive. Those are both just kind of on the web. Farnham Street has also started publishing a series of books, The Great Mental Models. So the first thing to do is just kind of go load your head with everything that's out there now. There's probably, as Munger says, there's probably 100 great mental models. 10 to 20 of them are going to apply in almost every situation. So definitely start with some of the all-time greats. Among the count like Occam's razor, which is the idea that the simplest explanation is probably right. Inversion, so reverse the problem, which is almost similar in process to the working general to specific, right? Solve the big no-brainer questions first. And you often do that by asking yourself, like, what is the result I want to avoid? And how would I get it? And being sure that you avoid the bad outcomes before you try to drive specifically towards the good outcome. Evolution is one that Naval talks about a lot. Charlie Munger has a great series that are all about the psychology of human misjudgment. And so the kind of whole set of mental models, I think there's like 23 that are very specifically geared around like what makes people make decisions. So for the marketers here, like particularly relevant, he started with Influenced by Cialdini and took those 6 and then expanded that through his own reading to another 23. So he's got a great talk. I think it's like an hour or two. That's the psychology of human misjudgment. I've listened to that thing like 20 times. It's an amazing resource. And once you've done like a lot of that reading and you start to see the patterns of like what these ideas are, then you'll start to kind of look at the world through this lens, and you'll start to hear somebody, in a meeting or hear a client say something, and you'll just kind of make this connection between a mental model that's in your head and this behavior that you're seeing play out. And then the level past that is kind of, you'll start to see a new idea that isn't a mental model, but you'll start to test it against other disciplines. And so when you have the mental models of biology and chemistry and psychology and, physics and the military all kind of in your head, when you hear a new idea, like I did from my artist friend who's like, oh, when you sketch, you work general to specific. I'm kind of like, oh, I've heard a similar thing from other disciplines. And you kind of run this quick tour through your head of all the other disciplines and start to see where those connections get made. And when you see a rough idea that is represented somewhere in physics and biology and mathematics and art, that seemingly like each discipline has its own language for it and arrived at it independently, but it's roughly the same idea, you can really see, you can give a lot of validity to that idea and you can trust it to be correct, like way more often than not. So I think that's a really interesting and kind of fun exercise to like combine all of those things and just spend time thinking about all the different disciplines and what they have to offer.
I believe the most interesting ideas are born on the intersection of different concepts, on different models, different ideas. So completely agree with you. And Pravin, you had a question, so feel free to turn your camera and jump in and yeah, ask your question. Or if you are not here, let me. Or if you are not here,
I
and
think
me.
he just dropped. Maybe he.
Yeah. So I see his question. So it was about what mental conditioning is required for running a successful business.
I don't know that there's only one answer to that, right? There's a million ways to win, and I think this goes back to Naval's idea of specific knowledge, right? Like you and I are all very different people. We have different strengths, we have different weaknesses, we have different interests, and the mental conditioning for the question seems to suggest to me that like there's a few. He assumes there's a few right answers, and I don't know if that's true. Jeff Bezos has a huge bias to action and a bias towards this like really incredible customer focus. But like, if you look at how Katharine Graham built the Washington Post, her model is much more deliberate and much more. It's not a bias to action; it's a bias towards correctness, and that's what her business and her, like, whether that comes from her personality or her industry. I don't know, and maybe there's some of both. But you can lean into what comes naturally to you, or make your own decision about what is going to work for you based on your industry.
Thanks a lot for sharing, and I believe it was an insightful conversation. We have chatted about it's unconventional topic. Lots of people prefer to talk about hacks, tactics, immediate quick wins. So it's more about strategic choices. It's more about building the right mental models that can help you to define new opportunities in your business and your career. So thanks a lot for joining us and sharing all these insights. For you guys,
Yeah.
I'll send you a recording. So, or if you are listening to this podcast on Spotify or on YouTube, just check the podcast description. You'll find the links to Eric's website, his Twitter account as well. I will add the link to the Almanac of Naval Ravikant website, where you can download the PDF or read the key insights from the book. And yeah, thanks a lot for attending the session, and thanks a lot, Eric, for joining us today.
Thanks for having me, guys. This is a fun one. I love this topic. I hope it serves you all well.
Yeah, and as just from the feedback from the chat, guys also loved the insights. So thanks a lot again for coming today. See you in the next episodes, guys. Cheers.